Hey, Andy and Jamie, what you got today?
Hey, thanks, Scott. Yeah, I think we got some good stuff for him. Hello, Jamie. How are
Hey
you?
Andy,
All right.
I'm staying cool here in the hot lands.
Yeah, it's all you could do. We call them the dog days of summer, and boy, you really get them in Texas for sure.
Yeah,
CM.
it's only about 102. That's it. Nothing
There you
bad.
go. That's right. Yeah. All right, CM, we do see your questions. Jamie got to you. He'll talk more about that when we come up to the Holly AI portion segment of our webinar. But so just kind of hang on for another 10 minutes, and we'll probably be there. All right, guys, welcome to Andy's Trading Studio. My name is Andy. I'm joined with Jamie here, and thank you for taking your time out of your day as always. And we hope not to disappoint. But before we do, we're gonna have to go over the disclaimer here. Once again, this is for educational purposes only. Anything you see and hear should not be construed as investment advice. If that's what you're looking for, seek out a registered advisor, a stockbroker, somebody who hangs a license and can do that, okay? But we can give you some good ideas and show you some really good software to help with your trading and investing. All right. Moving on, talk about our 5-star support, education, and training. Uh, Guys, we know that's very powerful software, and we want to make sure you understand it, you grasp it, and you're able to put it to use and use it to your benefit. And that's what we're here for. We got many resources for you to obtain, trading and education. First and probably foremost is the Traders Room. That's a free for everybody. Barry Anderson is the moderator. You get to see our software, listen to Barry, and not listen to, but watch a lot of other traders as they call out their positions and calls and things like that. So it's probably 500 traders in there. It's a great place to hang out if you're learning to trade and you want to see more about this software. All right, and then we have webinars Monday through Thursday. Okay, we have them 4 days a week, all in the same time slot. That would be 5 Eastern, the same as this. Myself, Jamie, and Steve Gomez juggle the responsibilities for most of those days, but on Wednesday, Dan Merkin is our CEO and our Brad Williams is our CTO, and they will give you a demo of things to come. Also a great Q&A to ask questions. All right, and then Friday support session, Friday support session, every Friday at 11 a.m. Eastern, we open up a go-to webinar and you guys come in and ask questions, okay? No presentation, nothing's on the docket as far as presenting you something. We just open it up. You guys ask the questions, and wow, I tell you what, we had a really good crowd this past. Summers have been kind of slow, but I think more and more people are getting wind of this, and we had a good crowd this past Friday. So come one, come all. That's tomorrow at 11 a.m. Eastern. All right, let's not forget TI University. Okay, this is 4 classes starting on Monday at 11 Eastern, no, 12 Eastern, I'm sorry. Every class is at 12 Eastern, Monday through Thursday, and it's a graduating class. You go from, we don't like hand out diplomas or anything, but you start with 101, you get the idea, and you go to 401. Basically 4 hours worth of curriculum with a Q&A at the end of each one. So if you haven't been in there, guys, you probably want to do that. All right, you're going to learn a lot about the software in TI University, that's for sure. Brokerage Plus, I probably will be moving this slide here pretty soon. We've been introducing this for a while, and now it is out of beta, but it is a great product. And now it's actually part of the standard. You get some of the functions in Brokerage Plus with standard. So you want more information, go to trade-ideas.com/beta. All right. Let's take a look at the agenda for today. We're going to talk about the market recap. You guys have fun the last couple of days. There's been some wild action, mostly to the downside. I'm going to have a lot to talk about on that. Holly recap, considering the market, not all that bad. Jamie will take the reins during that segment, and CM, he'll be able to, answer a lot of your questions in there. And then I'm going to talk about some powerful filters. I get emails all the time trying to do this, trying to do that, and I think still there's a lot of people that just don't really grasp the ideas of the 3 filters that I have mentioned there. Positions in, position, I don't know why I put an S in there, position and range. Change in other words, change in a certain time frame, like a change in 20-day or whatever, and a simple range. Okay, obviously a range has a lot to do with the position and range, but if you're not able to define what a range is, you're not going to really understand the position and range. Anyway, these can all be used very effectively when you're building scans, and so we're going to kind of break those down, take a look at them, take a look at some of the alerts and filter alert windows and top lists that I'm using those in. I think it's a great thing to do today. So, all right, so let's back out, pull up the market real quick, and I got a signal going off. Let's see. All right. Let's pull up the SPYs. Got it on the first grab there. All right, zoom in some here so we can look at what we're dealing with here. Okay, I'm not one. I'm obviously there's nothing to pound myself on the chest here, but I have said over the last few weeks, I've been talking about the lack of enthusiasm every time we go to a 52-week high. It just here's a great example. Even going back over here, took out this month, that last month, couldn't get there. Then we get up here finally, we get right here, take out all-time high. What do? Back. Do it again right here, back, fill. Do it again right here, came down, and just boy, it's been years since I've just seen a nice little explosive move through all-time highs. You just don't seem to get them, and it always makes me a little bit leery. And this is what can happen, when you don't get that. You sit here and you may go sideways for basically for the better part of a month, and then you get this down move and you've erased the all-time high in the whole month in 2 days. And so that's why I'm always careful when about loading up the boat and getting excited. Honestly, I think those are good times to be selling in the last couple of years anyway. And it seems like anytime we go to an all-time high, probably want to get rid of, unload some stuff. You can't even call it selling the rips, because we really haven't had any. There's not much of a rip, it just doesn't move very far once it penetrates the all-time high level. All right, so what do we have here? Well, I'm concerned about this, and the reason I am, of course, just 2 days ago in Steve's webinar, no bullish case, no bearish case to be made here, and that's pretty much was right. But now it has totally changed. And I think you got to be careful. I mean, obviously, we've taken out basically the month low of July, bounced back up, but really, still, it was a closing on a 1 month low here. So okay, and we've done it with volume. Okay, these were 2 brutal days, and remember what we're looking at when we're looking at these candlesticks, guys. And this doesn't mean we can't snap back, but these are emotions, okay? These are trader emotions a lot when you're looking at these candlesticks. And when you get 2 moves like we've had hard today, I mean, you look around here, very seldom do you see just 2 back-to-back big candles like that on big volume, okay? You may have a couple, but boy, 2 big moves like that, I mean, it doesn't look like much. It's a % down today, but after being way up here, close to taking out yesterday's high, that was a massive drop on big volume. So what I'm saying is, guys, I mean, the market is emotional, and it's probably more emotional than it is fundamental, so you got to keep that in the back of your mind as we're moving forward, okay? As you're maybe taking on new long positions, looking for, to buy something. there's a lot of people, that maybe, trap, and I shouldn't even call it trap because we're not that far off all-time highs. But if we do get bounces up, keep in mind, a lot of people in the back of their mind have these days. They just saw two massive, ugly selling days. Okay, so this could be any upward move could be met with more selling. Possibly, where can we go from here? Well, I see a gap fill right here that we could definitely, honestly, I'd be surprised if we didn't, meet this level. Got the 50-period moving average. And then
Andy,
I
like what you're saying there. I'm sorry, I didn't mean to interrupt there.
No, I like when you do that.
Your comment regarding these are emotions. Well, it appears to me that the past 2 days have been fear candles, right?
Exactly.
And that gap you're pointing out now, it looks like, it's inevitable. Because guess what? The fear didn't really subside at the close today. That volume was strong. And, of course, I'm just going to say what everybody else is thinking, right? Red day number one, what do we have? The Fed cut rates.
Sure. Yep.
Everybody's like, well, that's good for the market. Well, obviously not. And then today we recovered and we were like, hey, it's just like yesterday, never happened. Everybody's like, see, short-lived. And then the infamous tariffs, the triple T, Trump tariff tweet hits the tape. And I guess getting more money for the United States is also bad for the markets. That's what that's what it's telling us. So it's going to be very interesting tomorrow, to say the least. But man, we've just had the perfect storm as of late. A little technical, softness, as you keep saying. There's never a run, so that was already in place. And then you throw these other two external events in there, and boom, completely different world from Steve's no bear case here scenario. That's how quickly things can change.
Exactly right.
Thing we call the market.
You're exactly right, Jamie. And getting back to your point, I mean, even somebody mentioned in our questions panel there, he's talking about the Fed and the tweet, friend or foe. Well, more than likely, yeah, that is the reason. I mean, but like Jamie said, a lot of people were expecting a quarter-point hike. I mean, I'm sorry, rate cut.
Exactly.
But yeah, you have to get all the news out of your head and focus on the the price action. It's hard to do sometimes, especially if you're sitting in a bunch of longs, maybe in your 401k or swing account. Which brings me up to I'm gonna give you guys a little pointer of what I've done the last couple of days in my swing account, and actually made money on it. Even though I was long, I made money on these days just because of hedging. And I'll go ahead and tell you right now, we're pretty much done with this part. So a lot of times what I'll do is if I have a few positions and I'm long and they're working for me, and this is nothing new, but I'd like to do this on a day trading time frame. So in other words, yesterday it was VIX. I kind of got lucky, I guess, but I got long VIX. I got long VIX down here on this pullback because I had some longs, and VIX pulled back, even though the market really, if I go back to yesterday, it really didn't bounce up, and do a whole lot. It just, kind of kept coming after the Fed. But anyway, I hedged enough size to where not only did I cover my longs, okay, I was able to stay in my longs because I had enough VIX to where I actually made money. And I do this quite frequently. And today it was SDSs. After I had a couple of long positions still left over. They were still working, but I was a little nervous because the market, after what happened yesterday. So I got long some SDSs, and I kind of this one was definitely a gift. I think that yesterday was probably more just playing the tape, but yesterday, yeah, and then of course what happened. But I will actually get more size than to cover my longs. I will actually get enough to where if the market does collapse, I will actually make money and get to keep my longs. So it's kind of like I'm day trading, it's like a day trade hedge, and I do this. I've always done this because it's nervous when you start getting action like we've seen the last couple of days, and you're in a couple of longs that are working, and you're like, okay, well, I'm going to be careful here. So I'll actually grab enough size to where I can actually make money and be able to hold on to my position. So I hope that makes sense to you. It's just kind of a way to hedge an event during the day instead of pounding out of good trades that you might want to keep. All right, getting back to the market. Yeah, that's I think that's what we kind of watch here. If we get this gap fill, it's going to be close to this 50 moving average here. Now you have the 10s could possibly cross over the 20. So we'll see, but the main point is be careful, because when you have 2 days in a row like this with some huge volume to the downside, remember, it's emotional, okay? This is an emotional chart, and but I've seen this crazy market. It can still just kind of gap up tomorrow and slowly just creep higher for days. But just be careful, because a lot of times when this could be a sign of new selling pressure coming in, and people that may have gotten in the last month want to bail out. So yeah, not getting bearish at this moment by all means, but it's definitely something you gotta keep in the back of your mind, because we cross that big pivot point where we're getting to it right here. That's the line right there that marries up with this gap fill. So guys, if we can't hold this gap fill, this pivot that Steve and I, Jamie, all have been talking about, that's the key level. Looks like we may go down and test that tomorrow, which basically lines up with this gap fill. Well, Waleed, VIX, I usually hedge with SDSs, but I know with VIX sometimes you can get a lot more bang for the buck, because especially like yesterday. Today I wouldn't have done it just because no one expected that Trump tweet out of left field. But if I feel like I can get more bang for the buck, and especially when VIX is beaten up a lot of times on all-time lows like this, you won't get the down move won't be as hard, but that's the main reason. I mean, look at this move. You basically ran $3. If you have any size in that, you can see the nice hedge that was. But honestly, I usually don't like. There's only there's only a couple of times a year where I'll play VIX, okay, and that is when the market. A lot of times I'll see the market go to all-time highs, and I look and VIX is up on the day. Sometimes I'll buy that for a 2 or 3 day swing trade, because what's happening is you have the market going to all-time highs, but people are hedging. Remember, VIX is put buying, okay? It reflects the amount of put buying in the marketplace. So what people start doing is they start hedging, so the VIX starts creeping up. So even on days where you may be market may be at all-time highs, watch the VIX. Sometimes it'll actually be up on the day, and if I see that, especially for a couple of days in a row, I may try it. But other than that, yeah, I don't trade VXX a whole lot, other than maybe for a quick move on volatility. All right, yeah, don't get in the habit of playing this a lot to the long side. I promise you, it will kill you. but there's times when you can, it can be a nice little hedge. All right, Jamie, I kind of went off on a tangent there, but I did want to show that, because that's something that I've done for a long time, especially when the market.
That's really just practical good practical hedging.
Mm-hmm. Yeah. I mean, I'll give you the one position, I really like that I had today. I was loving the snap setup, and it looked beautiful. It did a bar reversal, and I got in it early this morning, and I'm like, I got some nice profits here. I want to keep this position. It's above its rising 10-period moving average. I don't want to lose this position, but if the market was to roll over, I need to protect myself. So just as simple as that. And then couple of other positions, but this was the main one I was protecting. All right, Jamie. Let's see. Do you have anything you want to add to the market here?
No, just good stuff. I mean, in these 2 past days. And by the way, ladies and gentlemen, if it sounds like I've got marbles in my mouth, I'm recovering from a pretty harsh dentistry session yesterday, so bear with me. But in any case, you know, I think the past 2 days that we've seen have been fear-induced.
Mm-hmm.
You know, in an ideal world and still an up market, you know, maybe we go test that little area tomorrow and then boosh off to the races again. But we will see.
Mm-hmm.
As far as Holly goes today, I'm just looking at the screen here, going over the blotter, making sure I'm seeing things right. But there is actually one decent risk on, risk off spread there. So this will be short and sweet today, ladies and gentlemen, because, well,
no problem.
We can only comment on what is here.
Well, look at the market she had to work with.
Exactly.
Yeah.
I mean, to see all modules green, even the slightest bit on 1.0. Anyway, let's see, about a point here and here between 1 and NEO. So almost up 3 points on not that big a trade count. What do we got there? 13 trades.
Mm-hmm.
And here we are looking at the all trades blotter, no filtering, just looking at risk on here. So notice the only one with any decent spread. I mean, we got what, 9 cents on this one. Actually, this one's not too bad. We'll start with the worst one first, because it's, you know, it's not the biggest dollar amount, but almost double there. 34 cents would be double. So nothing to sneeze at. Not the most exciting trade. Entry way up here after it's pretty extended, but then we get a little northern movement there before just kind of ebbing and flowing all back around the entry line, which, you know, on a day like today, to see this little stock that was one of Holly's plays not just crater into the close is also kind of interesting, right? Taking a looking over here at the daily, also interesting, right? So what I'm doing here is, yeah, we're talking about the trade and we'll talk about the risk on, risk off spread that exists, but just notice this was brought to you by the AI, and it stayed pretty dang strong all day when the market was doing this, right? So as we're, you know, plotting through the trades here, talking about risk off, risk on, or as you're interacting with the AI on a daily basis, just think about these things. Well, man, if this thing stayed strong all day today in this little bloodbath that we had, I'm probably going to need to add it to my list and watch it. It also has the added benefit of you know, being up in the sky here, hitting all-time highs, and didn't do too bad a volume today. So make a note of NEO. Watch what happens over the next 2, 3, 4 days. Mm-hmm. So let's talk about the risk on, risk off spread. All right. So once again, not that brilliant of a move, but hey, a move nonetheless. Holly getting out on a, let's see, I lost my place here, on a timed exit. Timed exit for nice chart. Good old 45-minute hold time. So she just does exactly what she's programmed to. A pretty timely exit in the short term because we got one more little click up and then back down to the entry line. Even though we could have made, I mean, look at the move here. She gets out here, staying in the rest of the day would have gotten us a little bit more. Doesn't even look like 17 cents on the chart actually, but I guess she got out somewhere. I'm not even looking at the price here. Anyway, probably in this wick somewhere. And then if you stayed in, break even would not have done it on this one. No big surprise there with what the market was doing. And hey, from a human perspective, trying to stay in any long when the market was doing what it was doing, that's a whole nother battle. I mean, I'm sure a lot of people were just like, I'm out of everything, you know. But if you did have the luxury of kind of watching these levels, what else do we notice? There's that 10-period fast line moving average pretty much doing its job until wham, that first push right off that line. Okay, well, there you go. There were 16 cents in there. Now this one, a little bit different. Man, I love it when these types of setups emerge, because here we go with the entry for Holly. What do we got here? I've already taken the liberty putting the line in at that previous high, which we got close here. Nope. Took a little leg down, slowly makes its way back up. As soon as it makes that range break, we get a Holly signal. So if you're quick enough, pull this thing up and go, ooh, it's just now breaking out. It's also brought to me by Holly, coming from close to across. Let's see, so we were already starting that trade with 62.5% statistical probability. We got another little auxiliary pattern, which just happens to be my favorite playing out. And volume was not just screaming off the charts, but was considerably above normal, even into the close, finishing with raw volume of 1.41. And boy, that was the sweet spot, just up, up and away. Took a little breather, a little pause here before heading higher. Notice when we did take that little breather, a little 45-minute downturn, but bouncing beautifully off that 10-period fast line, only to go back up, up and away again. So a great trade here, what I like to call at least a 3-star. We got the statistical probability, we got the auxiliary pattern playing out, we got volume.
Jamie,
so 3 very positive qualities there.
Jamie. Yeah, before you move on to anything else, guys, take a look at that. That's what you call relative strength. The market sold off as hard as it did, and look at the way that held up. That is one you want to watch for some follow through.
Yep.
And you can see there, if it gets above that congestion, going back over, I guess about 2 weeks ago, and then of course a few days ago, he's going to draw a line for you. Yeah, that could be that. More than likely will go to a multi-month high there. I'm not sure if it was earnings or what, but that's I love when I see relative strength like that, stock holding up on a market that's getting pounded.
Right, that's another quality, man. Strong into the close.
Mm-hmm.
Matter of fact, it'd be real interesting to put a top list together later on and go everything that closed close to highs today, and then check out those dailies. That might be a really good way to to find some good candidates to watch moving forward. I might have to do that later on. So anyway, as we can see here, just a beautiful trade. We had the volume, we had the auxiliary pattern, we had the statistical probability to start the show. So just a really clean trade, and it worked fantastically. And it gives us another thing to watch going into the next session. And once again, what do we have here? Just the beautiful adherence to that 10-period for most of the day.
Mm-hmm.
And as we can see from the blotter here, just not really much else to talk about as far as risk on, risk off spread. We had big at 9 cents in this Delphi trade. Not a bad little capitulation there. Too bad this opening wick had to kind of mess up an otherwise beautiful chart. But I guess that acted as a harbinger of where things might end up, and boy, that's exactly where they did end up. So that's about it for Holly. Pretty light day, but just to see her positive to this effect on a relatively light trade count, that's what you want to see.
There you go. Good job.
Alrighty, sir. I will get it back over to you. There you go.
All right. All right, so what do we want to talk about? It was the ranges, yeah, and the change. All right, so if you go to, let's just pull up, let me just grab one of these filters here from a window, configure, and let's just go in here and type range. I wish I would need filters, I don't know. But here's what I'm talking about. When you see something where it says today's range, 2-minute range, 15-minute range, you can see 5-day range. We got all sorts of ranges in here. And then we go to the position and range. So basically, what is a range? Okay, in any given time frame. Let's take for example, just a 10-day time frame. And let me just make an attempt to do some drawing over here. All right. So in a 10-day, all right, we're talking about range. And bear with me. All right, so let's say a stock over the last 10 days, okay, has been trading between $9 all right, and $10. All right, so over the last 10 days, okay, it has to be done inside the, for basically a range is just a total percentage or dollars, you know, of the low and high for any given time period, okay? So in this case, our low end is $9, our high end is $10, okay? And the way we do range, we give the low end a value of 0% and we give a high end a value of 100%. Okay. So if a stock is trading at 9.50, that's going to have a range. That's going to be a position in range, okay, of 50. Okay. So just keep in mind, because a lot of people get confused with ranges and change in. Okay, now I'm going to jump over to change. So range is basically just simply the high and low of that range, with 0% being the low end and 100% being the high end. Okay, so position in range. Now position in range, basically all it is, it's where the price is based upon the low and high end of that range, X range, whatever we're talking about. Okay. So, and then we're going to go to change in, because all three of these are important. Okay, so change in. Whoa, what happened there? Yeah, I'm gonna lose this anyway. Let me see. See if I can get it back here. Yeah, it's all fat on me. That's all right. Don't need it. And trash that. All right. And I got a window open somewhere. Now, here we go. All right, so let's go to change in. These seem straightforward, but you can't, I don't think people grasp them, because they ask me questions about it all the time. Okay, so basically, change. All right. Change in 5 days, change in 10 days, change in 20 days. Change in 10 minutes, 15 minutes, 20 minutes. So we have tons of them. I don't know why these don't say in like the rest of them do, but I think it's the same thing. Change in 20 days, change in 1 year. So basically all that is how much the stock has changed. So a stock could have a huge range over the last 10 days, but the change could be near zero. Okay, if it goes way up and then way down, then comes back like a rubber band and closes near where it was 10 days ago, you would have a change of zero. Okay, so it's really important to understand the difference between these. Okay, because I think when you really grasp their true definition, you can put them to use and make some really, really powerful alerts with them. And we're going to go through some of the things that I've built with these, and I think you'll get a good idea of what I'm talking about. Okay, the first one I want to use is, let me see, close all these out. Got too much stuff open up, I can't even see. All right. Let's use this bull flag intraday for an example. Okay, this is actually a good example for both change in and range, I believe. Let's take a look at it. So let's take a look at the configuration here. Okay, it's a top list. Click hide unused here. All right, we got to change from the close. That's pretty straightforward. 30-minute range. Okay, I have a max of 0.3. Let's click on our show me button. The 30-minute range is no more than 0.3%. Remember what we said the range is? The low and the high. So you're taking that whole low right now and I'm putting 0.3%. So what am I doing here? What I'm doing here is I'm assuring that there has not been a whole lot of movement in this stock over the last 30 minutes. So you guys who are maybe looking for consolidation, take a look at these ranges. Okay, you can max out how much a stock has moved over whatever time frame you want to. So if you're looking for those nice consolidations, don't think you have to find it in an alert, or you can use it just by using these range filters. Let's take a look at another one. I got a position in range in here too, and I also have a position in previous days range. See, look at all the position in ranges, the change. I thought I was using the change. Oh, it's just change from the close. Okay, I'm using a change from the close here, so it's not really a change in a certain time frame. It's just from yesterday's close, which is fine. But what am I saying here? Position in previous days range. Okay, it's a minimum of 90. Okay, so I want this stock to be somewhere near yesterday's high, right? Because it's a minimum of 90. If I click the show me button, it's saying the price is at least 90% above the low end of this range. So we know it has to be in the upper 10% of yesterday's range. Very powerful. I use this a lot, and I'll put sometimes 99 in here. I'll show you another example here in a minute where I'll use 99. I want it going through yesterday's high. There's your position in range. Okay, this is an example of when you don't see a word in front of it, the range is talking about the intraday range. Okay, so I want this stock in the upper 20% of its intraday range. Okay, so what am I seeing here in this right here? Just by looking at the filters here, let's see if we can break down exactly what this top list is showing us. We know it's up on the day at least 5% from yesterday's close. Okay, so we know it has some sort of movement from yesterday's close, whether it was a gap or at least better still, it traded up there. Now it could be up 1 or 2%. That's even better. 30-minute range. Okay, so now we know a stock has moved up and it's going sideways. Okay, over the last 30 minutes. This is what gives us the bull flag. Okay, after a move up. And these I've already discussed those already. So let's take a look here at these stocks, and I just closed the whole window. My gosh, no, there it is. All right, with today's market, you're probably not going to find a whole lot in here, but let's see if we can find anything. There's a great example. Okay, today, obviously it didn't go any higher, probably because the market grabbed it. Very strong stock. Look at the move we had today, up over 0.5% and trading sideways, setting up that bull flag. This was all constructed just by using, and I can't tell you how many people is like, gosh, I wish you could build a bull flag. Well, here it is. This is the best thing you're going to get to close to one. There's another only two in here, but look at another one. Was this that same Holly call? No, it looks very similar to it. Moved higher, more relative strength. Market got crushed today. This formed a bull flag and is still sitting at a bull flag next to some major potential breakout. You might want to mark this one up, put an alert in that one if it gets above that level. All right. Oh, you're welcome, Waleed. Yeah, if you any questions as we're moving along in here, let's just jump in. All right, let me show you another great position in range. This is one called daily fib retracements. Let's see what we did here. This is a multi-strategy. I got 3 strategies in here. This is for a daily chart. I don't care about retracements on the intraday. They don't mean anything to me. But on the daily chart, then they can mean something. So I got the 3 major ones in here, the 38.2 retracement, the 50, and the 61.8. Let's just take the basic 38.2 here, and let's take a look at the configuration here. Well, I wanted hitting a new low, but here's the important stuff. Okay, very simple. All I'm looking for is look at this position in year range. I just bracketed, okay, that fib value, okay, of 38.2 to where a stock is pulling down, trading down, and once it hits this level, it's going to appear on the top list as a 38.2 retracement. Once again, a very easy way. We have some fib stuff on there, but this is so much easier just to use these position in whatever range you want. If you want to do a 20-day range, you could do the same thing. Just use these same retracement values. All right, so let's take a look. That's all there is to it. Just position in your range right there. And let's take a look. Here's Under Armour on a 50% retracement. Let's take a look. get Under Armour. Let's see, same thing. All right. Here is our low for the year. Here is our high for the year. And look what we have right here at 1980. I'm going to just stick it in right close to its 200-day 2-moving average. Now, because of the market, it didn't hold today, but boy, I tell you what, that would be, you know, for people who are looking for, look at that, 50% retracement right there on the T. So for people who like to slow things down, something like this would work, you know, if you're looking for, now, once again, not hardly anything works in today's market for the long side, but this will give you a really good idea for stocks that are, and here's another beauty right here. Look at that, right at its 200-day moving average. Okay, so not only do we get the MBDT at the 50% retracement, we got it right on its 200-day. Now it bled off a little bit lower, so, but may want to be one to see if it can hold that level. Yeah, which William just asked which one you want me to share, and I'll share it.
I think it was the bull flag.
The bull flag, yeah, intraday for sure. Let me just do that right now so I won't forget. Yeah, it's a nice one. Bull flag. And let me drop it in the chat here. All right, there you go, William. All right, so there's another good example. So if I'm trying to see if there's anything that I haven't touched on yet. Well, I'll tell you what, I'm going to go ahead and share the bull flag because I have a bull flag daily one, which I think it can be even better. Of course, you're not going to see anything in there today. If I could learn how to spell. Daily setup. I'll share this daily one as well. I'll just put daily. All right, so I got change in. I think I hit most of it on that one showing you that bull flag. I want to show you what I was working on today because somebody wrote me email, and some stuff is very, very hard to do. Okay, so he was looking for basically stocks that don't really go anywhere, almost like, you remember the old commercial, Jamie, channelingstocks.com? Oh yeah. That's very hard. There's too many if, when, thens, okay, because basically you're looking for a stock that is basically just rolling over a certain time frame, and usually that has to be a long time frame for like a year. You can't build a lot of this stuff, okay, because we are kind of limited, even though we have tons of these position and ranges, and but to try to cap the movement of a stock over, you know, a 20-day period or you know, 2-month, 3-month period, it's really tough to do. So I was trying to work on something, and I'm going to show you kind of what I was kind of doing, just so you can maybe get an idea. And I told him the same thing, because I was really trying to work in building something. And so the key metrics here, the key filters would be position and 20-day range, okay? So I kind of did an opposite bracket here. It's kind of wonky when you do it this way. So basically, let's click on the show me button. You'll see what I'm talking about. The price is at least 95% above the low end of this range. So in other words, I want it in the top 5%, getting near its 20-day high, or also, not also, but or the price is no more than 5% above the low end of this range. Okay, so it can be either at the top end or the bottom end of its 20-day range. So I'm trying to get an idea of stocks that may get to their 20-day range in reverse. Another thing I did was 20-day range. Okay, remember, I'm do not want to see a range more than 10% over the last 20 days. Could probably bring this in even further because I got too much on here. I'm gonna drop this down to 5 and see what happens. Change in 1 year. Okay, I'm looking for stocks that haven't changed. In other words, hardly any change at all over the last year. Maybe there's a chance that if they haven't changed over the last year, they've just been kind of vacillating in a narrow range over the last year. So I was just trying to work something. Now, some stuff pulled up in here that I think will work for him, but there's other stuff where you just can't eliminate stocks that like move way out, because we don't have, one thing we don't have is a yearly range where I can cap the range. So the stocks may move outside of that range and come back, but we'll take a look at some of these stocks and just to see, how they're working. And I'll scroll out the daily, where this one, not a whole lot of movement over the last year, kind of just wiggling back and forth. Another example, there you go, stock, getting close to this high, going back over here. A lot of these are just going to be luck, but you're seeing a lot of the same patterns where the stock just really is not going anywhere. Here is a good ETF, the emerging markets really hadn't done anything over the last year or so, just kind of up and down all around. The problem with this is you really don't know where. Here's another one, but the point is where do you get in, where do you go long, where do you short? But it's a way, I kind of wanted to show you this just to kind of, so you would get another feel of the, the filters that I use. And let's take a look at them one more time. Because I think I even got to change for close. I don't want stocks that are down more than 2% or up more than 2%. That they're probably, probably not something you want to fade. Position in year range. I got this bracketed between 20 and 80%. So this way we know the price is. Now it could have gone out of that range at one time and came back. I can't prevent that, but at least we know it's still kind of far from its low and high. So I'm just trying to ingrain in your heads, guys, how you can play around with these ranges and change in. I don't have a change in here, but keep in mind that daily bull flag, because if you're looking for consolidation, those change can create some nice consolidations for you. You can max out those changes. All right, Jamie, I think I'm just about wrapped up for today.
Good stuff as always, Andy.
Well, thank you, Jamie.
Now,
trying to see
real quick
if anybody
here,
has any more questions or anything they'd like me to. Go ahead.
That was the intraday bull flag that you shared. Do you have a daily?
I shared them both. Yes. Let me see. Maybe I didn't hit. Hold on.
Yeah, I only see one in there.
Oh, okay. Yeah, let me. There it goes.
Okay, now it's in there.
Yeah, make sure that's it. Make sure that works, guys. Let me know if it doesn't. I forgot. I plugged it in. I forgot to hit enter. And let me go. I bet you some people don't have the daily fib. Somebody may want that, so I'm gonna go ahead and plug that daily fib in there.
That is indeed, that is the bull flag daily. I just loaded it up.
Oh, great. Thank you. All right. And if anybody's looking for these daily fib retracements, I'm going to drop that in there as well. And for you guys who may be in here kicking the tires, what these people are able to do, I'm able to share my alerts with them, and they can just simply click on the link. In a matter of seconds, they can have access to these alerts that I'm sharing. You're welcome, Gaston. You're welcome, Mike and Waleed. Yeah, you guys are all welcome if I'm missing anybody. Does anybody want the range bound? I'll drop it in there just in case. It's not something I'll probably use. It was more something I was trying to build for somebody, but you guys can at least take a look at it and see if it's something that you want to maybe expound upon. All right. All right. Well, if we got everybody satisfied out there and no more questions, I think it's time. May I have the link? The link to what? Did I not drop that one in there? That last one I dropped in there should be range bound. I dropped, yeah, while he's saying I dropped everything. So they're all in there. All right, Scott, if you want to come in and walk us out.
Sure, sounds good. We have a test drive coming up on the 12th. Go ahead and reserve your pass now so that you can get ready for it. And it's got 5 full days of testing Trade Ideas Premium. So whether you're a standard member and just want to try out Premium, or if you're not a subscriber at all yet and want to try everything we have, it's only $9, well, $8.99 for 5 full days. It includes additional special webinars and all kinds of help. So trade-ideas.com/test drive is the URL to go to check it out, register, get your pass. We've got a new series of ebooks out. Go to trade-ideas.com/setup. There's 3 books, each with 2 chapters. Each book has a theme. Andy and Jamie both contributed some of the chapters, so check it out. It's free. Trade-ideas.com/setup. Put in your email address, get the download. We've got a podcast. Should have a new episode up tomorrow. We try and do it weekly. Just search for Trade Ideas Podcast wherever you listen to podcasts and add us as a subscription. Check out the back issues. There's some good interviews in there too. We have a code that's good this month. If you want to start off with the subscription right away today, save 15%. Summertime is the code, all caps. You can also use this if you're a standard subscriber and wish to get into the premium model right now. Keep that in mind. So if you have any questions, email us info@trade-ideas.com. That goes into our help desk software. It's the best place to ask us questions. You can also follow Jamie on Twitter at QuantBot, or Steve Gomez is at TodayTrader. We have at Trade Ideas. Trade Ideas Pro is the handle on Facebook. We're going to have a recording up later on tonight or tomorrow. So thanks, everyone. Have a good one. Don't forget the Friday support session tomorrow.
That's right. Thanks, everybody. I'll see you tomorrow.
Yep, we'll see you in there. Bye-bye.